All right, hello everybody. Welcome to this weekend review. This is part one of today's weekend review. Today is February 18th, 2018, and it's 15 minutes to 11 p.m. EST time here in Toronto. And this video is part of the FibStalker analysis and trading service. As usual, I want you to make sure you review and accept the disclaimer here. This is the usual disclaimer. Trading Forex carries a high level of risk and may not be suitable for all investors. So if you have not never read and accepted this, please stop the video now and review the disclaimer. All right, so let's dive into our markets here, and I'll start from the SP 500. And this market has, if you remember well, has bounced twice from that 25-27. This is our extension, most recent extension here. It's most recent, but it's actually mid of 2016 if you think about it. So it's very important to remember that these levels can go back for many months and sometimes years. So what's going on now is that this market never bounced off of the 50% short, and in fact what happened is that 50% short has failed. So no bears showed up the second time. So the first time the bears showed around this 27.03, and the market retested that larger level. So we were looking for a double test here. Because the test has been successful, it means that the larger time frame here is in control. Okay, and that's the reason why we are seeing this market moving higher, and the second time this area is not held. So the 27.44 has not held here, and now the point is, will this market offer an opportunity for an entry? If that's going to happen, it's likely going to be an extension long. I don't believe that this market is going to retrace now 50%. Now, what I believe is not really very important. What is important is what the market is going to do, and we're just applying rules here. So if this market comes back into 26.97, that is going to be an opportunity for a trade into 27.83 and 28.30, 28.28, 28.30. Okay, so this is what we can see here. Anything else, it's a haphazard. I mean, it's, you can buy this market now, but this market could actually retrace. So if you buy it, you should at least have a stop below 26.83. Much better a stop below the 26.16, which is a large stop, right? We don't want this kind of stops. In any case, this is what we see, and we have to respect price and the market. Okay. Now, dollar index has moved lower, as you know. We were looking at this area of potential support. The market came in once. It actually traded outside the support area here, and then it came in twice last week, but instead of continuing lower, we saw that bounce at the end of the week. Okay, so this market, when we look at the weekly, it has a short setup. Okay, and we can see that that was the monthly, of course. We can see that setup on the weekly as well. It was the weekly, the one I was looking at. My apologies. So we can see that on the daily as well. That's what is trading. Okay, now the question is whether, and this has traded and found participation, a risk-free trade, and now the question is whether someone is coming into this area trying to push this price higher and retest the 90.18, or if this market is just a local profit taking here and will be continuing lower. Okay, now when we look, and I'm just going to look at the 4 hour in here, just because usually in the weekly review we actually look at only at the larger time frame, and then during the daily We will in daily intraday we will review the smaller level. But here I want to show the next measure move, and then the following one has failed. Okay, so there is a 4-hour measure move, sequence of measure move that has failed here, and that's the reason why I mentioned that there is a potential scenario for a retrace higher, where first into that 90-80, and that would be a second test of that level. Okay, gold has been moving higher most of last week. It actually traded 50% here. You can see this on the weekly. It was an extension from high to high. So congrats to those of you who have taken the trade here. And the market now, it's very extended, as we can see here from this measure move. So we need to identify the anchor that has traded, and the extension here has traded already. Okay, from lows to from highs to highs. And just we need to understand what has traded. Okay, so you can see the lower has now traded here. So algos in this move are using other traces. Okay, and we need to look at how price has also moved, whether lows have been tested before highs. In this case, as you can see here, highs have been tested before lows. Okay, so there is a level, and 133.44 could be 133.45 here. Is the level that has been tested. So this market has a daily long setup in here. Okay, so this market could continue higher. It all depends. So based on this, the gold is anticipating a continuation lower for the dollar index. But note that it has gapped down on at the open here, and therefore any scenarios here are open. There are still setups, the 50% long here that we see on the monthly, the 1263, which is pointing higher, and the 113.17 that is also a long. So we have a monthly long, a weekly long, and here we have a daily long. So everything is pointing higher in this market. So this market is anticipating a continuation lower for the dollar index. We will see if that happens. Silver, on the other hand, is actually in this lateral move here, and we don't use trend lines, but I just want to use them just for you to visualize the what's going on at the moment, right? So there's a market that is kind of trapped between levels here, between areas, and when we look at the definition of sideways is that bull fail, right? Bulls fail here, and also bears fail. So when bears fail and bulls fail one after another, then we have this lateral move. So really the market is moving between these two levels, and now we are seeing we saw the 50% short from the previous move here being respected on the weekly here and on the daily. Okay, so although this market in a sideways move before or after will resolve either on the upside or on the downside, but in here we had shorts trading at the end of the week last week. Okay, so actually silver is pointing down while gold is at the moment pointing up. So these incongruence will be resolved, and we just need to wait and see what's going to happen. So next market is the Australian dollar, US dollar. Okay, and this market has traded in here, as we can see, the 50% long from lows to highs, and this is still in play here. Okay, so this market, when we look at the larger time frame here, we see a sequence of measure moves, and highs to lows, the 97.23 as traded, right? And let me see, and the next measure move, right, that would be from lows to lows. Okay, and this, you remember that as this level here has failed. Okay, now we can make the case always that there is, on this larger time frame, there is a partial range here, and that has not come into play yet. So at the moment there seems to be no resistance above these prices, and the 50% long here of this inner move has played, and as we can see here, we are seeing this market continuing higher. Okay, so let me see if I can give me just a moment here. And okay, so what's the meaning of this? So the meaning is that there is a possibility for this market to continue higher, and we saw that spike that we saw in the news US news last week, and this market though is trading an extension long, and so far this extension long has been respected. In fact, it has been retested at the open here. Okay, so the daily is saying up, the weekly is saying up, the monthly has no resistance above. It is possible for this market to continue higher into 79.98 here, and then 80.49. Okay, Euro USD. This market has put some sort of double top here. That's what we see when we look at this price. Now, it doesn't mean that it cannot continue higher. In fact, it could just be profit taking from previous resistance here. Okay, so I wouldn't be necessarily worried here of what's going on now. This market has there was an extension, an aggressive extension shot that has failed, and that would be the only indication that we have for a failure within this area. Okay, so and that would be also a confirmation of short. Now, this confirmation did not come from the 50% here, came from a dirty setup within the area, and we're gonna see what this market is gonna bring. Now, the point is though that this is really a range here. Bull and bears have failed, and typically, this kind of price action here has the possibility to bring price to lows. Now, the level we need to watch is the 50% long. In a range, those levels do not hold, but we will see if this is tested. This pace here, 1, 2, 3, 4, and 5. 1, 2, 3, 4, and 5 is comparable to the pace of the move lower, so I will not consider an extension long. Okay, another level you could consider is this one, but I'm not going to consider it, and this is barely holding here. it could actually fail. Okay, so 2380 is the test. Below 123.39, we're gonna see again the 122.20 in this market. Pound versus US dollar, similar chart here. It's a bit weaker. In fact, it couldn't make it to previous highs, as you can see here. However, the bears did not hold this market. We're not able to hold this market, as you can see here. Otherwise, this would have been maybe a good short. Okay, so because of that, the bulls here, we need to consider them still in control, and in fact they are, because the bears here were not in control. Okay, so again, we have two traces. We have the extension higher, and we have, which is from here, and this has traded as well and found participation on Friday and again today, and there is the 50% from lows. Okay, so I'm gonna remove the bears here because the bears are out of the game, and this market is showing more clearly than the euro a possibility for a continuation. If that happens, it's going to be 142.09 and 143.12. Okay, next is the US dollar Canadian dollar, and this market has failed. The bears on the monthly and on the weekly as well, they have failed. Okay, so the move higher in this market has been pretty difficult and complex here. This market has bounced from the 50% from lows to highs here, and the lows that we can see here are the lows I'm using here are the July 2011 lows. Okay, and there was participation, so let me remove some of these measured moves here. Okay, there was that participation that I brought price into the 129.30 area, which is also a short area. So at the moment what we're seeing this market oscillating between these two areas, very large time frame. And what's happening is that bulls have failed. They were not able to support this price, but also bears have failed. Okay, they were not capable of supporting this price. So this market is either moving between the larger areas here between 120.50 to 129.30, or it is going to, and actually in every sideways move, eventually is gonna resolve either on the upside or on the downside. And in the meantime, will continue narrowing here. So this market might not offer good opportunities going forward until that situation, a sideways situation, is resolved. Okay, so what we saw last week, though, it's a hint, and the reason is the 50% here has held. Okay, now there's always the opposing measure moving on the daily. It's from lows, high to lows, and as you can see, also the 50% short has held. That's again a confirmation of what we saw in that larger time frame. The level narrowing here, right? The range narrowing here now, with the market moving between 124.64 to 125.67. So basically 100 pips of move here. So when I see these kind of things, yes, this market could go down and fail the second testing and just continue down, right? The point is, there was that participation there, so we know that there are algos there, and we know that there are algos here as well. So narrow trend, there's not another trend like in this case. It was very well defined. In this case, this market might continue laterally. So my suggestion is that when I see this kind of thing, I just stay away. Okay. US dollar Swiss franc has had very strong move lower here, and At the beginning of the year, I was not trading yet. We had not restarted our room, but this market has traded a nice 50% here. Okay, and that 50% has actually justified also the levels that came after that. As you can see, the 50% traded into the first target at 96.33, second target 95.27, and then the market went much lower, and recently came to trade into the next measure move of that lows to lows, and that was as traded basically 2 weeks ago. So last week we saw this market basically following up on that move, and you know, on the smaller time frame you could make a case for a 50% short as well. So what we can see here on the daily, and it's much clearer on the 4-hour time frame, is a low to lows, and this is still holding, but this might fail, and if that happens, then you remember this market is in a quest possibly to go and retest that 86.52. See, really the lows to highs after the 2015 little play joke from the Swiss bank here that brought price back into 86.52. And the next measure move, or actually the inner measure move here, it's actually, you know, it's actually holding here. Okay, now this has been a range, and I do not see a special reason why that should hold, but anything can happen, of course. And now if we see a continuation of this reaction higher, then there are two levels that we want to consider, and the first one would be the 50%, the inner move here, the 50% highs to lows. That could actually offer resistance. And let me trace again the current measure move that we are seeing on the daily. The market could come higher and retest this level as well, because there are two possibilities: scenario number one or scenario number two, whereas this level is retested, and here we need to understand whether this level is going to hold or not. Of course, for this to happen, it would mean that the dollar index is actually trying to succeeding in that reversal. All right, with the Japanese yen, this market also has been very strongly moving lower. We had a setup that is not visible on the monthly, but is visible on the weekly, and that was lows to lows, found participation at 110.38, and price went into targets here. The first target was, it's the target that we see here, the 107.36, 107.30 here, and the market went into the second target as well. Went just below it, and now it's reacting. What it is reacting to? Well, the next measure move, especially if the dollar index continues lower, it's going to be 106.90. Okay, this could be the opportunity for this week. This could be the trade for the week. Okay, the market comes here, FibStalker timing, finds participation, a risk-free trade, because the FibStalker levels, you know, have a high probability provide you to offer you a risk-free trade at these levels. And if then it continues lower, well, we have targets below. Okay, and those targets below are 104.86 and 103.80 that help price into that 170 level. Okay, so this would be a second test here, and that's the only area where algos and professionals are going to test this market before there is a lot of congestion here, which might slow down the price, but the real test is going to happen at 170. All right. The next market I want to review, and we start with the miners here. That's the New Zealand dollar, US dollar, and this market has traded an extension long here, and this is also a dump money signal here. And it has targets above, as you can see here from the monthly. The first target would be that 73.47 level here, this area here, 75.50 area, and this market is apparently continuing. Now, of course, there was that test of previous highs that found some profit taking here. Now, we don't know whether this market is going to continue lower or continue higher. As we did for the other markets, I'm going to identify a 73.40. It's kind of our last line in the sand here. If the market gets below 73.16, then we can see a retest of 71.89. Okay. And the last market is the US dollar, Singapore dollar, the last market of this first part. And this market, as you know, I like to use it as a proxy for the dollar. In fact, I believe that the composition of these of the US dollar, Singapore dollar, it's a basket of currency which is undisclosed actually, but you know, the way it moves shows that there is a very strict relation or correlation between the assets in the dollar index and in the US dollar, Singapore dollar. So I like to use it as a proxy. Sometimes it's a confirmation, sometimes offers signals before or offers confirmation. So as we can see here, this market has traded at the 132.96, and the 50% long, this market is within an area of support, and that's one of the reasons also we saw that profit taking it happened right into that area. The point is that there was never a participation right at the 50%. But there was a short here that is still in play and has a target at 128.74 and possibly below. So we need to be careful here and see how this market is going to behave. If there is profit taking, the last line in the sand is going to be this 31.64, which is also a short setup if this market continues lower. Okay, this market comes back and into this area and continues lower, then there's going to be a setup for 130, and potentially this is an extension even lower, helping price into previous into those lows and targets that we see on the larger time frame, helping price into that 127.28.74, and of course piercing the 129.66. All right, so this is it for the first part. Thanks for watching, and I'm going to post this in the room, and then I'm going to work on the second part. Thank you. Bye bye now.